What's up, YouTube? It's your boy Rome, and I'm back with another trading video. And in today's video, I want to give a midweek check-in. I want to talk about the two trades I took this week. One was a loser, one was a winner. So I want to talk about why I lost one and why I won the other one. And without further ado, let's get straight into the charts. So here I got the screenshot of the first trade that I took. This was on April 6th, on that Monday. And here's my entry. Here's where I exited out the trade. Right, so you see I took the loss here, and this really should have been a winner. As you see, that price continued down lower, but we'll break that down. Let's get into it. So I took this trade on gold. All right, first things first, we can see that we have our previous day's high, midpoint, and low, and price was moving in the area of the midpoint in this price action, right? So I don't take a trade until 9:30 opening. That's on a day-to-day basis. So judging off of that, we want to mark out our swing lows and our swing highs that are relevant to that 9:30 open. So here is 9:30's open right here. So you can see we have a lot of swings that are being printed here. So price action already is kind of choppy and it's kind of messy. We can see that. We can see that we also have a fair value gap right here. It's very small, so we're just gonna bypass that. All right. So we also created this swing high. Right. All right. So at 9:15, we swept this low. Price came in at 9:30 and went higher, and then we ended up closing bearish, right? Bouncing off this midpoint. All right. So price is in a range in motion right now. All right. And in ranges, we want to see highs and lows be taken out. All right. So what I did on this day is, once we got to each of these individual swing highs, I wanted to go down to a lower time frame and see if I could frame my entry pattern off of these swing highs and lows with a continuation off the lows and highs as well, right? So let's go down to the 1 minute time frame. We're gonna take a look at this 9:45, and we're gonna take a look at this 10 o'clock, and we're ultimately gonna take a look at this 10:30 candle right here. So scaling down to the 1 minute time frame. We can see that at 9:30, price was right here at 9:30. All right. So the first time that we went above a swing high, we didn't have much of a reaction, and then 9:59 we ran above this swing high here, and then we get a order block that's formed. Okay, so the first part of the process is done on this trade here. On this from this swing high. All right, and I can go ahead and remove that swing high out of our frame, as well as this one, because they've already been tapped into and they didn't have much relevancy. All right, so as price is continuing to go lower, what I'm looking for is a continuation order block. I'm looking for price to stab into a fair value gap or sweep out a swing high. So we have the fair value gap here. Price went into this fair value gap, but we didn't create another order block off of it. So we didn't have a continuation order block. So price continued to run here without giving us another setup right? And I could really remove this swing high now, because what you'll see happened is we went above that high, right? And then we attacked this swing high as well as this swing high, and this is also a swing high as well. So we attacked all three of these swing highs, right? And then once again we get our order block. So the first part of the process is complete right here once we close below this order block. All right, so if I scale in a little closer, we have a fair value gap going higher, then a fair value gap going out. So once again, I'm looking for a continuation order block. Now I'm looking for more confirmation and continuations, because price action is kind of moving sideways. It's not really having one strong bias direction going from, on my higher time frame, on my daily time frame, we have a bullish fair value gap that we're in, and then we have a bearish full fair value gap that we could be reacting off. So I don't really have a bias. So I want more confirmation in order to take a trade. All right, so as you can see, price came down. We got this candle closure here, and that created our continuation order block. Now, one thing about this one is we didn't really respect the fair value gap, and I usually would bypass this, but it was pretty volatile today, and I still liked the fact that we got an immediate closure back below these series of up candles, creating the order block for us to continue lower. So what I did was enter in here with my stop loss above this high, and of course first take profit would have been at this 1-to-1, and then we would have went for a 1.9 R down here. Now I lost this trade because I decided to get out once I seen a bullish order block go in against us, right? So another thing I want to point out is we created another continuation order block here as well. We stabbed in, and then we got a candle closure below this series of down close candles. And realistically, if I moved my stop loss here, because we shouldn't come back above this, I would have got stopped out anyway. But at the same time, I usually only move my stop loss down once we hit that 1R. So there's different ways to manage the trade. In this case, I made a technical error on my own because I stopped myself out of the trade, because what I seen here is we had these series of down close candles that came below this swing low right at the midpoint of yesterday's low yesterday, and then we got this candle close here creating a bullish order block. When this happened, I'm thinking, okay, maybe the bulls are more strong and we're going to continue higher. But as you can see, price did try to go higher. We swept out this high and then created another continuation order block to the downside before price fell in my favor. So this was a technical error on my part, as well as I also upped my the amount that I was going to risk this week, and that probably had a little effect on my psychology. I'm like, I don't want to take the full hit on my first trade of upping my risk. So this was a decent setup, bad execution on my part, and you know, it's a learning process. So I won't make the same mistake next time. The way you become great fast is not making the same mistakes over and over and over. How fast you can fix these mistakes would be how fast you can become great at whatever your skill set is. In this case, become great at trading. So that's the first trade. And then now let's talk about the second trade that I took. And once again, we could look at the executions. I entered in here, right here at that order block. And I ended up stopping myself out right when this creation of this order block happened. Right, I got out here. And as you can see, price went a little higher. It went and took out my original stop loss. And we've melted down. So, still was a winning trade. I just fucked it up, for lack of a better term. Alright, so here's the second trade, the winning trade that I took today. As you can see, I entered in here, and first take profit here, and then second take profit here. So let's go into the charts and see how it looked. Alright, so let's clean everything up. Once again, we have the previous day's high, low, and midpoint marked out. And here we can see that this is 9:30 opening right here. We can see that price ran above a swing high right away. And once that happened, this is when I scaled down to that 1 minute time frame, and let's see what we can find. All right, so I'm marking out my relevant swing highs and swing lows right before price is going to open, as well as fair value gaps if we have any. We don't have any that's relevant, so I'm marking out that swing high and swing low. And I know at the price likes to manipulate at market open. This is the reason why we wait till after 9:30 to take these trades, right? And we can mark out this swing low as well, because that is relevant to the opening. All right, so scale down to the 1 minute time frame. Okay, what we can see is right at 9:30, look at the manipulation that we have. Price drives above that swing high, trapping buyers into going long, stopping out original sellers. It's a lot of activity in this. And then right away, what did we do? We create our order block with this candle closure here. Okay, so that's the first thing I see. And it's actually pretty fucking clean, right? And then we have this fair value gap right here once again. And one thing we got to know, that price is volatile right now, right? This is still early, so once again we close above that swing high, right? I mean, not the swing high. We close above that fair value gap, but it's a fast drop right back below the series of up candles, creating this order block. All right, as well as we don't even have to worry about that, because we have a swing high right here, and we ran above that swing high and then got that candle closure. So us closing above the fair value gap really doesn't matter. This is still considered as a sweep of a swing high, and we got the candle closure. All right, so this is where I took my entry here with the stop loss above that swing high. Of course, I got out at the 1-to-1, as you seen on the screenshot. Pull it back up right here. Got out right there. And then we allowed the rest to run to that 1.9 R. So once we got to the 1-to-1, I moved my stop loss down to break even, and I got so close to getting tapped out. We didn't tap me out, thank God. And the rest of the position ran down to that 2 R's, which you can see I got out here. Right below those equal lows, that 15-minute swing low, right? So those were the 2 trades that I took today, this week so far. The first one was a loser that should have been a winner. bad execution on my part, kind of a fear of losing, you could say. And then the second trade was, I executed this one pretty great. I got out at a nice position. The runner didn't get stopped at break even, and we really could have ran even more. I really could have took like a continuation play here, right? Because once again, we created another continuation order block. But I didn't really feel comfortable taking that entry here, right? Because we hadn't touched this 15-minute swing low yet. So I would have to be anticipating a breakout. And I didn't expect, I wasn't sure whether it's going to break out or not. So I didn't take that extra trade there. But that's all I really got for this video. Just wanted to give a breakdown and give some people some guidance, or maybe just a system that you could look at taking your trades off of if you're looking for a system out there, as well as, you know, just some psychological tips of, okay, we got to be disciplined if we really want to make money in this market. We got to have a plan, and we got to control our emotions and our reactions, because you can lose money when you should make it. And that was a perfect example with my first trade. But that's all I got for this video. Deuces.